What secrets do the ultra-wealthy guard behind their opulent lifestyles and exclusive networks? The tactics that fuel their fortunes are often hidden, relying on sophisticated strategies and access to resources most can't touch. In this video, we reveal the top 10 dark secrets rich people rarely share, each unpacked to show how they maintain their edge. 10. They exploit economic downturns. Economic recessions devastate the middle and working classes, but for the wealthy, they're a golden opportunity to expand their empires. With substantial cash reserves and access to low-interest credit, the rich swoop in to buy distressed assets, foreclosed homes, undervalued stocks, or struggling businesses at steep discounts. During the 2008 financial crisis, for instance, astute investors purchased properties at 30% and 50% below market value, then sold them for massive profits when the economy recovered. This strategy hinges on financial resilience. The wealthy have the liquidity to act when others are forced to sell. They also leverage insider knowledge, using advisors who flag undervalued assets before they hit the open market. 9. They thrive on delayed gratification. The stereotype of the rich flaunting luxury cars and designer clothes often overshadows their true discipline, a relentless focus on delayed gratification. Many wealthy individuals, like Warren Buffett, live modestly relative to their net worth, reinvesting profits into assets like businesses, real estate, or stocks rather than indulging in short-term splurges. Buffett, for example, still lives. In the Omaha home he bought in 1958, $31,500, funneling billions into investments that compound over decades. This mindset prioritizes long-term wealth over instant rewards, a principle rooted in patience and strategic planning. The rich understand that compounding returns, whether through reinvested dividends or property appreciation, builds exponential wealth. 8. They invest in education beyond degrees. The wealthy invest heavily in education, but their focus extends far beyond traditional degrees. While elite universities like Harvard or Stanford provide prestige and networks, the rich also fund specialized training, exclusive seminars, and mentorships that deliver insider knowledge. Their children attend private schools with unmatched resources. Think small class sizes, cutting-edge facilities, and teachers who foster critical thinking and leadership. These schools also cultivate lifelong connections with future CEOs, politicians, and influencers, creating a network of privilege. Beyond formal education, the rich hire coaches for skills like negotiation, financial strategy, or public speaking, ensuring they and their families stay ahead. 7. They leverage philanthropy for power and tax breaks. Philanthropy is often seen as pure generosity, but for the rich, it's a strategic tool with multiple benefits. They establish private foundations or donor-advised funds, which allow them to donate assets like stocks or real estate, claim significant tax deductions, and retain control over how funds are distributed. In 2022, U.S. charitable deductions totaled $499 billion, with the wealthy claiming a disproportionate share. These vehicles not only reduce tax liabilities, but also enhance public image, casting the donor as a benevolent figure. Additionally, philanthropy opens doors to elite networks. Think gala dinners with policymakers or board memberships with influential organizations. Some billionaires use their foundations to fund research or initiatives that align with their business interests, subtly shaping public policy or market trends. 6. They minimize risk through asset protection. The rich are meticulous about shielding their wealth from risks like lawsuits, creditors, or market volatility. They use sophisticated tools like irrevocable trusts, limited liability companies, LLCs, and offshore accounts to create legal barriers around their assets. For example, a real estate investor might place each property in a separate LLC, ensuring that a single lawsuit doesn't jeopardize their entire portfolio. Offshore accounts in jurisdictions like Switzerland or the Bahamas offer additional protection and privacy. The wealthy also carry robust insurance policies, such as umbrella liability coverage, which can cover millions in potential claims. These strategies, while legal, are complex and expensive, requiring top-tier attorneys and financial advisors. The average person rarely has the resources or knowledge to implement such measures, making asset protection a privilege of the elite. 5. They control information. Asymmetry. Information is a currency, and the rich have access to it in ways most don't. They pay for proprietary data, insider networks, and advisors who provide market trends, legal loopholes, or investment opportunities before they reach the public. Private investment clubs, high-fee consultants, or exclusive newsletters offer insights into off-market real estate deals, emerging industries, or regulatory changes. For example, a hedge fund manager might learn of a company's merger plans through private channels, positioning them to profit before the news breaks. This information asymmetry gives the wealthy a head start, whether they're buying undervalued assets or avoiding market crashes. Meanwhile, everyday investors rely on public sources like news outlets or retail trading platforms, often acting on delayed or incomplete data. 4. They diversify income beyond salaries. Unlike most who rely on a single paycheck, the rich build diverse income streams to insulate themselves from economic volatility. Their portfolios include passive income from real estate rentals, stock, dividends, royalties, and profits from businesses or private equity. According to the Federal Reserve, the top 10% of households earn over 50% of their income from non-wage sources, compared to just 15% for the bottom 50%. Investments in hedge funds, venture capital, or startups offer high returns, but require substantial capital and connections. For instance, a wealthy individual might own a portfolio of rental properties generating $10,000 monthly, supplemented by dividends from a stock portfolio. 3. They use debt as a wealth-building tool. Debt terrifies most people, but the rich wield it like a scalpel. They borrow against existing assets, like real estate or stocks, to fund new investments, using low-interest loans to amplify returns. For example, a billionaire might secure a $10 million loan against a property to buy another, deducting the interest while the new asset appreciates. This good debt strategy magnifies returns without requiring liquid cash, a tactic known as leverage. It's particularly effective in real estate, where rental income can cover loan payments while property values grow. However, this approach demands significant assets and creditworthiness, which most lack. 2. They buy influence, not just assets. Money buys more than property. It buys power. The rich donate to political campaigns, fund think tanks, and lobby for policies that protect their interests, like tax cuts or deregulation. A 2018 study from Princeton and Northwestern found that economic elites shape US policy outcomes far more than the general public. 1. They exploit tax loopholes most can't access. Topping the countdown is the ultimate secret. The wealthy often pay a lower effective tax rate than the average person. They use trusts, offshore accounts, and tax-advantaged investments to minimize liabilities. Shell companies in low-tax jurisdictions like the Cayman Islands or charitable remainder trusts defer capital gains taxes. Conclusion: these secrets, rooted in exclusive resources and knowledge, reveal how the rich stay ahead. While some tactics raise ethical questions, others, like delayed gratification or diversification, can inspire scalable, ethical approaches for anyone. The rich may guard these truths, but uncovering them empowers you to navigate your own path with insight and ambition. If you enjoyed this video, make sure to subscribe to this channel for more content. Thank you.